Hello friends, today we're going to be diving into the topic about how does seller financing work in real estate. In today's real estate market and the current economy, we're in a very unique situation where interest rates are higher than they've been in a long time, but we still have very low inventory. So in this type of market, how can a real estate investor even make money? What strategies exist today? Well, today we're going to cover exactly that to really understand how seller financing works in real estate in today's market. So seller financing as it applies to real estate has never been as important as it is today. Those who understand it and know how it works and understands the strategies associated with it are going to come out looking like champs in the next few years. So today I'm going to be covering most things as it applies to seller financing in the real estate world by first helping you understand what does that term even mean, seller financing in real estate. Secondly, I want to explain to you how today's market conditions are set up nicely to take advantage of seller financing. And lastly, talk about the strategies that you can do right now to take advantage of seller financing options in real estate. If you're ready, let's go. So what is seller financing? Easily put, seller financing is another creative financing tool that people can use in real estate. Essentially, it's when the seller, someone who's selling a home to a buyer, they essentially become the bank. They will finance that property to a potential buyer. Now, why in the world would a seller do that? In the market that we had the last few years, most sellers wouldn't, right? They're going to get a high price for their home. They might even have people competing for their home and raising the price even more than what they wanted to get out of it, right? So in some situations, it doesn't make sense. But why would a seller even consider it? Some sellers, they might not be able to sell their home in a traditional way, right? Like I said, in today's market, and I'll talk more about this, but with interest rates high, low inventory, there's not a lot of buyers out there, right? So if somebody is willing to buy their home, but they might need a little bit of help on the financing side, a seller might consider that. Now, the seller would probably need to have a decent amount of equity in the home, or at least a low enough monthly payment to be able to make a difference there. So the seller might also like the idea of a certain percentage of a monthly payment coming in every single month. That might give them some security. And the seller ultimately has the security of the home. So if somebody defaulted on their payments, they can still retain the home. So it's really not a bad idea for a seller to finance a home. And they're typically structured in such a way, just like a bank, right? So you make monthly payments. They need to be on time, right? There's an interest rate associated with it. Like I said, the loan that the seller's offering the investor is still secured by the home, the property, the investment. And so essentially they are the bank. Matter of fact, I took advantage of this. There was a property that I purchased probably about 16, 17 years ago. It was a ranch. And as I bought the property, because it was a ranch, it had little income coming into the property. There was a cool piece of income that was coming from Conservation Reserve Program, but I didn't want to put down the 30, 35% that the bank wanted. So the seller was willing to finance 1/3 of the property for me. It allowed me to put a lot less down on that ranch. But the seller wanted what's called a balloon payment, meaning that he would finance that 1/3 of the price of the ranch for 3 years. And it was an interest only payment. And then at the end of 3 years, I would have to either get the loan or pay off the balance. So I've utilized seller financing in my investing strategies. Matter of fact, one of the most recent STRs, short-term rentals that I bought, we utilized some equity in a short-term rental that I had in Florida to buy another cabin up close to Yellowstone National Park. And the seller financed a portion of it, about 10% of the property's purchase price, to be able to allow us to then put a smaller down payment and take that down payment from the equity we had in the Florida home to put as the down payment on the property, the cabin property close to Yellowstone, with a seller financing it. Now, same thing, there's a balloon 2 years later that we either have to pay that 10% off or absorb that into a loan if appreciation's gone up. So seller financing really is a strategy that I'm familiar with, and it's worked really well, and I've had good experiences with it. So how does today's market conditions specifically play into the role of seller financing? Well, higher interest rates are going to create this more now than ever. Because think about it, we have really high interest rates right now compared to what we've had. 2, 3, 4 times higher than what somebody might have. You probably know a lot of people out there that got a mortgage for less than 3%, maybe even less than 2.5%. With now interest rates being closer to 7, 8%, and hopefully they come down, but who knows? Most people right now might not be in a position to go buy a home the traditional way through a bank, needing to put a certain percentage down and then having a payment that is probably 2 or 3 times higher than it would have been, 2 or 3 years ago, is really a challenge. So the environment has created an opportunity where somebody who has that low interest rate and has some equity in their home could then become the bank to finance the property for a new buyer. So it is today's economy has created this perfect storm where seller financing is probably one of the best options out there. Now that we understand that, what strategies can be utilized with seller financing? Well, the first and easy one is them just to become the bank, right? Nothing really special. You go in, you say, I want to buy your home. Will you seller finance it for me? Which means they still probably want a down payment like the bank, but where they have a super low interest rates, they probably need that. They probably need some equity in their home, and then they will charge you maybe a below market or maybe close to market, and hopefully you can negotiate that down to a much better than market interest rate. Otherwise, there'd be no point in utilizing the seller. You just go to the bank. But that's the traditional way. The seller says, yes, I'll finance for you for a period of time. And they might even say, I'll finance it for you interest only, so your payment could be really low. But just know the challenge with an interest only seller finance is that, say they're seller financing $100,000 of a $500,000 home, you still owe the $400,000, you still owe the $100,000, and you're not making any payments towards principal in that scenario. At the end of the year, 2 years, whatever the term is for the seller financing interest only portion, you still need to pay that full balance. There's nothing being paid down on principal. But if you believe the property is going to go up in value or the opportunity for interest rates to go down or there, it could be a good option. The other strategy that I really like is subject to or sub to seller financing. It is a very creative idea, a very creative model when it comes to seller financing. So what is subject to? Subject to is a method where the buyer takes over the mortgage payments of a seller without involving the banks. In other words, you buy the home subject to its existing financing. It allows you to bypass the traditional lending procedures. I love this strategy because it can allow you as an investor to secure properties with little to no money down. And so what are the benefits of sub-to real estate investing? Now, one of them I've talked about, little to no money down, little upfront costs, because you're taking over existing financing that is already there rather than going to a traditional bank to get financing. And realistically, the seller might want some money down or a commitment of money down at some point in the future, but it definitely is one of the benefits is low upfront cost. Another benefit of sub-to investing is faster acquisition process. By assuming the existing mortgage, you can bypass some of the very lengthy times and processes that traditional banking requires. Sometimes it takes 60 to 90 days to close on a home, whereas with sub-to, you can get engaged right away. Another maybe less important one is, but less impact on your credit score, right? Your credit score isn't being pulled. It might, depending on the seller, but typically in a sub-to relationship, there's no credit being pulled. And so that's another advantage of sub-to real estate investing. Another great option I've talked about in other videos is lease option to buy. In this scenario, the seller really is financing the home, but you as a buyer, you go in with the idea and negotiate an option to buy the home at a certain price at a certain date down the road. And during the time when you get the property under contract to the time that you'll close, you then become the renter inside that home. And you can negotiate a certain percentage of your rental payment every single month going towards your down payment on a piece of property. So in a previous example that I've used before in my videos, let's say that your rent is $2,000 a month, but you negotiate $500 of that each month to go towards the down payment. And let's say that you've done a 2-year long-term lease with an option to buy it after 24 months. So basically you're putting $6,000 the first year, $6,000 the second year towards your down payment of $12,000. And if it's a primary residence, that could be something where that might cover what you need as a down payment or pretty close to what you need. So it becomes a really good tool, lease option to buy. The other thing to consider there is within 24 months from when you negotiated the price of the home to the price you're buying it at down the road, there could have been appreciation that happened if it's in the right area. So you also get advantage of the appreciation that's happened over that period of time. Now, where can you find these deals? Where can you find seller financing deals? So one of the best places and the place that I've actually used many, many times is Facebook. So on Facebook, you can actually join very specific groups. I'm part of a group called Seller Financing, and it's a Facebook group. Matter of fact, the last 2 real estate deals I've bought have been seller financing that I found in this group. There's even a group called Sub-to group. I'm sure there's one that's a lease option group. So Facebook is very specific, and it has a very specific group of people that are all like-minded, that are looking for and presenting those deals, right? Because it works for both the buyer and the seller, right? Obviously, somebody in the group that I'm a part of was looking to seller finance a property. I was looking to find a property that I could buy seller financed. The last one I bought in Oklahoma was seller financed, and the last one I bought in West Valley City, Utah was seller financed. Now, same thing, there's a balloon at some point down the road, but these are a little bit farther down the road. It gives me plenty of time, and I'm making money every single month on these rentals that I have because I've got a seller finance that I paid them a mortgage every single month, but I rent it out for more than I'm paying. paying, and I pass the expenses on to the renter. So it is probably one of the better places to find these groups. Another way to do it is maybe driving for dollars, right? You can go look at homes, you say, man, I'd love to buy that home. It might be, and typically when you drive for dollars, you're looking for a distressed property. One that if you were to buy, you can get it at a good deal. Maybe the seller can finance it, maybe they can't, or maybe you could use sub 2 or a lease option and you can fix the property up and receive the benefits of that. So there's definitely places to find these properties, whether you're doing it by driving for dollars, using software. The one that I like is RealFlow. It allows you to put in very specific data to find some properties that could be good seller financing. And obviously the one that I've used just recently is Facebook groups. So these are some things that I've seen that have worked really well for me when it comes to seller financing strategies and places to find them. I'd love to hear your feedback. Comment below. I'd love to enter in with a dialogue. And as always, I've got a free gift for you, aaronsfreetraining.com. Click on the link below and it's a free short-term rental calculator. You input all the data, it spits out for you whether it's a good deal or not. Once again, thanks for stopping by and watching the videos. We appreciate you. Have an awesome day.